This is Naveen Gupta. He's in the MENA region, which is the Middle East, Northern African region for Ripple. And it's a highlight clip that you're going to learn about how RippleNet and ODL works. You're also going to hear that XRP is used now, but as other crypto evolves and they have enough liquidity, Ripple will use many other things. Now, it's my opinion that this will be the CBDCs and the stablecoins. Also, it's interesting that Naveen says 95% of projects that they see in the crypto market don't make any sense. But one area that crypto and blockchain does make sense is in gaming and tokenization, especially in real estate. He gives that example. And also the programmable money in CBDCs. Wow, you want to listen to his use cases that he describes. And how does Naveen see the competitive landscape? In other words, what will keep Ripple relevant? Have a listen.
So let me just make it very easy, right? So basically in RippleNet, two nodes, let's say node A and node B. Let's just, for simplicity, just take their two banks. They want to speak to each other. They are able to speak to each other almost like WhatsApp, right? So in our technology, what they're able to do is they're able to put the address of bank B. And let's assume the bank B says, I'm okay to accept messages from bank A, like what we do in WhatsApp. Once our phone numbers are there, we accept the person, then the bank A can communicate with bank B. So let's assume Arjun is the customer of bank A. He says, hey, you know what? I want to send money to Naveen, who's the customer of bank B. The first thing will happen is just a message will go from bank A to bank B. Hey, Arjun wants to send money to Naveen. Are you open to accepting this money? And bank B can essentially look at my bank account and essentially say my bank account is active and I'm a good person and AML and all the KYC checks are done. He says, yeah, you know what? Arjun's money can travel to Naveen from bank A to bank B. So the thumbs up is given. And then the moment Arjun presses enter, your account will get it debited. And in a few seconds, the account of Naveen will get credited and everybody can go home. So just for example, one of the biggest benefit is even before the debit happens, we are able to pre-clear a transaction, which means we are able to do the checks on the transaction. We can make sure that indeed the account is not closed and any other checks that need to be done by institution A or institution B. Because for example, one of the biggest problem today for Arjun is, let's assume by mistake, he puts Naveen's last name as a different name, that the transaction will go in a black hole and it'll maybe take you 7 days to find out, hey, you know what, by mistake, instead of putting Gupta, I put John, right? I put something else, right? And that's a big problem. So that's just on the information exchange side. The second thing happens on the transfer of value side. And here it's important to understand that banks have used something called as Nostro account. The easiest way to think about it would be working capital for banks. So exactly the same scenario. Let's assume bank A, whose customer are in currency, let's say GBP, when they want to send money into Philippines peso, what they would do is they would park very large sum of money. So let's assume they would park on a Friday evening, $5 million equivalent in Philippines peso, which is essentially kept with the bank B. And then when Arjun walks in, gives his 1,000 GBP, then that gets debited and the Philippines peso account gets credited. And these keeps happening with hundreds of transactions till that $5 million equivalent gets exhausted. Now, people ask me all the time, why are cross-border remittances so expensive? They are very expensive because somebody's bearing the capital cost of this $5 million equivalent. Somebody's bearing the depreciation risk of this $5 million equivalent. And somebody's waiting for the customers to come in one by one, so that this amount slowly gets depleted, right? And I think you already know this, that cross-border payments sometimes can be between 2 to 7% of the principal value. That means if you're sending $200, $14 will be taken away between these costs. And the biggest cost is liquidity cost. In the case of using ODL, on-demand liquidity, the solution that's started by Ripple, there is zero Nostro account balances that are required. So exactly what is going to happen is GBP in real time will get converted to XRP. XRP within 2 seconds will travel to Philippines, and in Philippines, it'll get converted to Philippines peso and the payout will happen. And this can happen throughout the day.
So there's no need to create a Nostro
No need to
account.
create Nostro accounts. It happens 24/7, real time, with real time rates on both the sides. The execution is very fast. There is almost nil friction and there is zero working capital that is required. That means all this cost, which was inherent in the parallel system, can now go back to the customers, and then we can all essentially enjoy much cheaper, faster, and more efficient remittances.
That's very, very, very fascinating. I've got two questions.
Sure.
Might be dumb, but let me ask the dumb questions. I say, I specialize at half smart questions. This might be less than half smart. So you will, if money has to move within RippleNet, you only convert into XRP. Correct?
We don't convert, so we essentially use an exchange. So, for example, Bitstamp is an exchange that we would use in the UK. For example, CoinsPH is an exchange that we will use in Philippines. So these are exchanges with open order book. So we use those open order books to do the conversion.
But you only do it into XRP.
That's currently we only do it in XRP, but the technology itself is neutral. So as more cryptocurrencies evolve and they have enough liquidity pairs, then we will use many other things as well.
You're able to use,
absolutely,
and you'll be happy to. Okay.
Yeah. RippleNet, for example, the ODL solution can't be launched in a number of jurisdictions because there's no regulatory clarity, right? Okay. So today, if
somebody achieve that full connectivity,
absolutely,
they need to have
so they need to have the full portfolio of this thing. And then the second thing that I would say is that all innovations take time. So there are, of course, adopters, and now it's at critical mass where it's moving very, very fast, but also at the same time, adoption itself takes time, right? So if you and me, after a few years, having a discussion to say, hey, what is the state right now? I would be surprised that there is any institution that is not taking advantage of the blockchain technology that is available to essentially significantly create efficiency versus where they are today.
Okay.
And again, I have to be honest with the audience, 95% of the projects that we are seeing in the market are actually not real projects, but they may be in some way lots of other things, but definitely it doesn't make sense to the mind. So that's the reason also you're seeing so much of dissonance, right? The second thing that I would say is for a lot of use cases, blockchain will make sense. For a lot of use cases, both blockchain and cryptocurrency don't make any sense at all because they don't create any value. Those things can be solved by many centralized system or many other technologies far more efficiently, right? So this is my personal view. Two areas where you would see blockchain almost like the email movement for the internet, right? So everybody has an email, everybody has a WhatsApp. One would be payments, and the second thing would be gaming, right?
Okay.
And I just want to take one example for gaming. So for example...
I was actually going to ask you, talk to us about gaming. Payments, I think...
Absolutely. So my son is 16 years old now, and he's an avid user of Roblox, right? And let's assume, and he's been playing that for many, many years. Let's assume you're a cool person. I introduce you to him. The way you will get invited is you will be invited to a Roblox game where you would not be playing with him. Somebody else will be playing. There'll be a voiceover, and you will chat while you are at your home with him, and he will judge you whether you're cool enough to be his friend or not, right? So Roblox essentially is a place, and Roblox is a token. Of course, the only issue is that Roblox today cannot be used outside of the Roblox ecosystem, but otherwise it essentially runs and works exactly like, for example, a crypto world.
Trust me, I have a 12-year-old.
Yes, absolutely. So,
I'm learning.
So we both,
and I'm firmly not cool.
And today you can essentially exchange Robux for digital collectibles. You can essentially get many things done.
There's a whole parallel economy.
100%. Yep. So tomorrow, if the ice cream guy, say Baskin Robbins, was to say, hey, give us Robux and we are happy to exchange it for an ice cream. So suddenly you exactly have what happened with Bitcoin, with the 10,000 Bitcoin and the pizza. You exactly have the same story where now Robux has an value outside where somebody is ready to trade that Robux token for an ice cream. So let's assume that ice cream is $5. So suddenly those bunch of Robuxes have $5 of value externally, right? So to me, these are two areas where the use case is very clear, and these will be early adopters, and we would essentially use it in many walks of life. Whereas all other use cases will still take time, and also it'll take time both from a great innovative company coming around and then saying, hey, you know what, we can solve it at scale. The term that I would want to demystify is tokenization.
Okay.
Right. I think because that's a term that will be much useful for our users, right? So the easiest way to think about it would be on the blockchain, anything that is of value can be tokenized or can be broken down into its smallest unit, right? So let's take an example. We have this building today. Mostly buildings is bought by large developers. It's bought by people in the UAE. A bank in the UAE essentially finances it. Now, let's assume somebody in Japan had money and then said, hey, I want to participate in the development of this building and also enjoy the rentals and the dividends that will come from thereof, right? With blockchain, it's very easy for us to tokenize this building. And let's assume this building is $1 million, and then we decide to tokenize it into $1 value each. And when we issue 1 million tokens, then somebody in Japan, in his base currency in yen, let's call it this building as podcast. The building podcast can get listed exactly the way a Bitcoin or Ethereum or anything else is listed, and then the person can essentially buy in yen token of this podcast, and essentially that gives essentially the rights depending upon how this building is essentially built. Now, in this tokenization, all the tokens can trade 24/7. The person can get exposure. He or she can buy and sell whenever they would want to. And a lot of these buildings can be built. And then we essentially have true financial inclusion where at the smallest common denominator, people can choose to participate in heavier or high capital assets like these, right? So to us, from my mind, tokenization has just begun, right? At a very, very basic level.
So
Sure.
fractionalizing allowed us to do that.
Yep.
We didn't need tokenization for that. So what tokenization is giving us is the ability to trade that fraction ownership in a more transparent manner, or can you connect the dots for me here?
Absolutely. So I think we are just using some of the similar terms. So yes, in terms of if you were to able to fractionalize it to its the smallest common denominator, then and you can call it package it in a token, and that token essentially is traveling on the blockchain where it can essentially move from ledger A to ledger B very, very easily, or wallet A to wallet B, and it's available globally. We are essentially using the same term.
Is there
so
no
basically
alternative
tokenization.
technology to do that?
There are many other alternative technologies, right?
So why are they not getting popularity?
I mean, I think people, I mean, let's call it, these are all technologies still in their infancy. And when I say infancy is they're still trying to be developed, trying to get critical mass, because again, this requires a dance between the techies or the technologists and the regulators, right? So let's assume the rights of the token holder needs to be enshrined in the law. If tomorrow something was to happen to this building, then he or she should be able to claim whatever rights are enshrined in the token, right? Today, there is no framework to be doing that. So, but once that is in place, then absolutely this can happen. Like you rightly said, this can happen through other technology as well. But at the same time, blockchain does seem to be promising in this regard.
Okay. And
the easiest way to think about CBDC is programmable money, right? And let's take an actual example, because that way it's easier for everybody, right? So what we did during COVID is most of the governments were worried about their citizens, and they said, hey, you know what?
I like the way you say most of the governments.
Yes, most of the governments were worried about their citizens.
Not all of them.
Not all of them. Some of them couldn't afford it, right? So they essentially said, hey, you know what? We need to give a packet of money to Naveen and Arjun to make sure they're able to take care of themselves, right? Now, the purpose of that money was that we are able to spend it in a hospital, or if, for example, if we have food insecurity, then we can go to Carrefour or to a local Kirana store and then essentially able to buy something to eat for our family, right? Now, of course, what we have seen, and this has already been proven, lots of people used it opening account in Robinhood and many, many other things, right? But that was not the original purpose of actually money being given, right? Now, with programmable money, what you're able to do is you're able to restrict for money to be used only for certain purposes. Perfect. Also, you can build an expiry factor in that money to essentially say, hey, you know what? For 6 months, 1 year, or till COVID stays, or till the time the population needs help, that money is available. The unused money essentially goes back to the exchequer, right? Can you imagine what huge benefit that will essentially have? Firstly, the money will go to the people who need it. Mm-hmm. Second, money will be spent in areas where they're needed most. And it'll be used at locations where quality service or quality care is being provided. And last, if it's unused money, so let's assume 40-50% of it is unused, then essentially the government is able to take it back, right? Or the issuer is able to take it back. So then it essentially establishes, let's call it a contract of honesty between the government and the citizens to essentially say, hey, you know what? If you have a particular need at that particular time, you would be protected. If you don't need it, then you essentially just give it back, right? So to me, it's a far better system. For example, a great use case of programmable money. So if things were to come around, and there are many, many things that will keep happening around the world, this could be a great use case of programmable money.
But isn't there a bunch of people who are squealing at that idea or saying big brother?
Yeah. I think there will always be friction, right? So my thinking, and this is just what my intellect says, is people can say no, but they have to put a better idea forward. If they're saying no for the sake of knowing no without putting a better idea forward, I don't buy in, because I would rather have an idea that incrementally or significantly improves the lives of people and or otherwise not do anything. If I choose not to do anything, that would be wrong.
Well, I guess welcome to the politics of 21st century then.
True.
Right.
And if you look at the macro that we are all in right now, the cost of money is rising, right? So if somebody wanted to borrow US dollars, maybe 2 or 3 years ago, the cost of money was almost zero. Now it is 5.5% already, right? So if you, for example, go to FAB, go to any of the UAE-based banks and you put a US dollar deposit, three months or 1 year US dollar deposit, you'll get upward of 5%, right? Which means whenever the cost of money is high, the Nostro accounts that essentially they keep with institutions around the world become too expensive. So they only have two choices, either to cut their profit margins or essentially to charge the customers. Now it's a huge competitive environment where you really can't charge the customers more. So what you're doing is looking for ways to make your own operations very efficient. And hence the reception could not be better.
Ripple's not the only player, I guess, which does what Ripple does, right? How do you see the competitive landscape evolving, right? What will keep you guys relevant? How do you guys stay ahead of the curve?
So for me, firstly, customer first, right? So we are a customer-centric company. And the first thing that I would say is
But you're not the only one who says that, Naveen.
Yeah. I agree with you, right? And I think a lot of it essentially comes...
So tell me what customer first means for you guys.
Okay, right. So customer first means, just to give you an example, like within our tech, we have already built the optionality. What that optionality essentially does is, let's assume money is moving from point A to point C, right? And the best way for it to move is from point A to D to C, instead of moving from point A to B to C. Then automatically the tech has the intelligence to essentially to be able to route that through, right? So we are already anticipating the need of the customers, almost like Amazon anticipated comparison shopping, to essentially say, hey, let multiple brands compete and let the customer make the best brand possible. So we within our product set are already thinking of ideas to essentially say, hey, you know what? Of course we are relevant for today, but how do we make sure that we stay relevant for tomorrow, right? So that's customer centric. So we are anticipating the customer need and constantly innovating, right? The second thing that I would say is that we are an open ecosystem, which means essentially we have built this payments layer or the payments infrastructure, but a lot of people can build on the top of it, right? People can build on the top of XRP Ledger, like people can build on the top of Ethereum. People can also build on the top of RippleNet as an ecosystem, and we are open to those collaborations. So
can you give us an example what it really means to build on top of something?
Yeah. So what would it mean building?
Is there an example?
Let me just think of something that will be relevant for somebody. Say, for example, if somebody wanted to build an NFT marketplace. So Arjun was to say, hey, you know what, for these podcasts, I want people to be able to subscribe to these podcasts as an NFT, right? Let's assume it's instead of a music NFT, it's a podcast NFT.
I have no clue what that means, but it's a great idea.
It's a podcast NFT, right? So already the tech and the tools exist that you can essentially launch this on the top of XRP Ledger, for example, right? And you could benefit from XRP exactly the same way in which Ripple is benefiting, right? Where you can use it as a bridge to essentially move from a digital asset A to digital asset B, or a currency A to currency B, right? And all these are interoperable. And that interoperable means you're able to take advantage of what Ripple has contributed, but you're also able to take advantage of what hundreds of other developers have contributed. Because together, we can have multiplier effect on each other.
As I said in the beginning, this is a highlight clip, and the video, which was uploaded in the last 24 hours, it's still pretty much flying under the radar. It's 55 minutes long. It's excellent all the way through. I put a link to it in the description. All right, everybody, do take care. Sayonara for now. Bye-bye.